Hello and welcome to our look at the upcoming August 19th trading session. In front of you is the economic calendar, and as you can see right away, we do have a little bit of an announcement coming out of New Zealand that will directly affect the New Zealand dollar. It is the 2-year inflation expectation, third quarter, by the Reserve Bank of New Zealand. This will be very localized, but it could be rather drastic for the New Zealand dollar if you do have the ability to trade that. The next announcement, as far as we're concerned, that makes any movement in the market is going to be the CPI, the retail price index. Think of that as congruent to it. It's just an addition. The CPI will be the real number year over year for July. It's anticipated out of Britain to be 1.8. Anything better than that will be positive for the Footsie or even the British pound against the US dollar. However, later in the day, we have the US CPI numbers, ex-food and energy, and the full one at 1.9 and 2%. Both of those numbers will move the markets. We feel that the marketplace will more than likely react in the S&P 500. NASDAQ or Dow, the S&P 500 looks like it's on its way to 1990, so any pullback should be a buying opportunity as well. On top of that, though, we feel that if this moves in favor of the U.S. stronger than anticipated and weaker than anticipated in Great Britain, that will be negative for the pound dollar or vice versa. So keep that in mind as well. Looking at the daily calendar towards the end of the session in Asia, you can see that we calmed down again, and as a result, we do believe that the CPI numbers out of both the UK and the US will be the main attraction. Again, looking at the Footsie, we had a positive session on Monday, and a positive CPI number should continue this trend. Short-term pullbacks could be buying opportunities as well, as certainly the Footsie looks like it's picking up quite a bit of bullish momentum. The aforementioned pound-dollar pair did fall during the course of the day, but it found a little bit of support, so we formed a hammer. This hammer, of course, suggests that the market's going to go higher, perhaps aiming for the 1.68 level. That being the case, a break above the top of the hammer sends us there. And keep in mind that the CPI number out of Britain will greatly influence this. If it's bad pound, good dollar, then you could see a breakdown heading to the 1.65 handle. Looking at the euro-dollar pair, you can see that we fell rather significantly during the day, but we remain in the cluster that we have been in for some time. If we have some kind of significant surprise to the upside in the CPI number out of the United States, we could break down, but we need to get below 133 in order to get bearish. In the meantime, any rallies will more than likely be sold into. And now we have looked at the Tuesday, August 19th trading session.